Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin charts, and I will identify some key price targets which could determine Bitcoin's next move, whether it be bullish or bearish. So let's get right into the charts. And we will start over here on the 1 week candles for Bitcoin USDT. And currently, Bitcoin is selling off once again, and it has actually breached the 618 level on the Fibonacci extension. And that is a key level that we've been keeping an eye on. As you can see on these previous 4 weekly candles, Bitcoin has managed to close above while testing. But at the end of the week, it did manage to close above the 618 level each of these prior 4 weeks, and that 618 level is right around 46,700. And so that would be the first level I'm keeping an eye on right now for Bitcoin, is to close above this 618 level on this weekly candle. Now, with that being said, if the buyers step up, the next level we'd be looking at is going to be right around the 50% level on the Fibonacci extension, and that puts us right around 51,000. And it is perhaps no coincidence that the 20 EMA, which is the purple line running through the screen, is also currently right around that 51,000 level. So I think the 51,000 price target is really what the bulls need to be shooting for and breaching above if they hope to get any footing and take control of this battlefield. After that, 53,000 could be a point of resistance, as it is a previous level of resistance that the Bitcoin price rejected from before moving to all-time new highs. So any close above 53,000 would definitely be bullish, and then we'd be looking up at the 382 level on the Fibonacci, and that puts us around 55,000. That's probably also a psychological level as well, and has acted as support back here previously, so it could flip into resistance. Now, after 55,000, then we're looking up at 60,000, which has been previous support and resistance in the past. So 60,000 to 61,000, anything above that, then the possibility of heading back up towards the previous all-time high of 69,000 would be in play. But with that all being said, the bears are in control of this market currently, and they're pushing this price down below the 618 level of the Fibonacci extension, which falls right around that 46,700 level. The next target that the bears are seeking to crush below is the 45,500, which you can see on these previous 3 weekly candles acted as support. And the more often we test this support level, and actually we've already tested it on this week's candle and it has held as support, but the more often this level gets tested, the more likely it will break down. And so if the price does break down below 45.5, I would more than likely open a short position with a profit target somewhere down around 42,000, which would be the low on this wick, or even perhaps back here at the 786 level, which is around 40,600. If the buyers fail to step up around the 786 level, or again that 40,500 level, then we could see this price sell off even further, and more than likely back into the lows of last summer, which puts us around 28.8. And if that plays out, then there's no doubt that the bears are in control of the battlefield, and we can expect an extended bear market. Now, if we jump over here to the daily candles for Bitcoin, we see kind of the same levels as far as support and resistance. However, by adding in the EMA ribbon, we can see that Bitcoin, each time it breaks down below these ribbons, it has a tendency to be very bearish. And when it breaks out above the ribbon, that price action tends to be very bullish. And right now we are obviously below the EMA ribbon. We did bounce up into the ribbon only to reject and sell off, and now we're moving sideways. And I want to point out a similarity between this sell-off and the bounce into the ribbon and the rejection and moving sideways to the previous sell-off in the summer of 2021, where the price sold off, kind of moved sideways, eventually moving up into the EMA ribbon, only to sell off once again. And so if we jump forward, we see a similar sell-off from the all-time high, and then the price action moves sideways and eventually moves up into the ribbons, only to reject and start to move sideways. So again, the quick comparison of the sell-off, bouncing up into the ribbon, and then eventually moving back up towards that all-time new high. We could be in for similar price action. Now, I know a lot of people say history repeats itself, and the reality is history does not repeat itself. Humans repeat history. So what we're looking at is the mob mentality of the market. We could see very similar price action that we saw previously, and we could see again now. And if that's the case, then we are probably in for at least another month to 2 months of sideways and somewhat bearish price movement for Bitcoin's price. And all those same price targets still apply that we discussed over on the 1-week candles. They're all the same levels. The only real big difference now is these EMA ribbons. Any close above the EMA ribbons can be considered bullish, and as long as we reject and stay below these EMA ribbons on the daily candles would be considered bearish. Now, if you're wondering how I'm actually trading Bitcoin right now, we'll jump over to the 1-hour candles, and pretty much ever since Bitcoin has sold off, I've been going long or buying the dips, and I've been selling at resistance. So when Bitcoin sold off down to around 42,000, I bought that dip and I sold on the bounce back up. And so I have basically been going long or short depending on where we are in this current range. And right now I've actually added 48,000 as a level of resistance most recently, as we see again this price action dips down to around 45.5 and is basically getting rejected here around 48,000. So again, you could buy around support of 45.5. Now I would have an extremely tight stop loss below 45.5, because if this price breaches down below this 45.5 level, we are more than likely to see an even deeper sell-off, perhaps back towards 42,000 where this wick comes in, or even lower. So again, I'm typically going long when the price reaches down around 46,000 or 45.5, and then I'm actually flipping short when the price comes into resistance, and right now that resistance level is 48. And right now I would have a very tight stop loss if I was short. I don't want to see this price getting above 48,000. If it does, then it could actually run back up to say 50,000 or even 52,000, where that is actually going to be a very strong level of resistance. And so I will definitely continue to trade this range bound price action, and it's basically my range day trade. And if you're interested in seeing a video on how I actually trade this, drop a comment in the comment section down below and I'll consider doing a video on my range day trade setup. And so I think that pretty much wraps it up. The levels I'm keeping an eye on right now for Bitcoin is going to be the 618 level on the Fibonacci extension, and that's around 46.7. We're below that. And so the next level I'm really watching out for is 45,500 as far as the bearish price action. And then on the flip side, I'm keeping a close eye on 48,000 and then 51,000, which would be up around the 50% level on the Fibonacci extension. So if we get a breakout or a breakdown, I will do an updated video. So now would be a good time to shoot the subscribe button. If you have any questions or comments, drop them in the comment section down below. If you like this video, do me a favor, spike a like, and remember, never send your money into battle without first doing your recon. See you in the next video.